in the bear market, there's one a week. I guess there's a lot more time to do conferences.
Yeah. Are any of you guys going to, I know James said you were, are you going to the mainnet conference next week?
No, I'll be at the Solana conference. That's the next one on my roadmap.
Gotcha.
But some of our team are going to the one in Singapore, the token conference.
Oh, nice.
The big one.
Oh, nice, man.
Yeah.
I'm just going to give a couple more minutes, by the way, and then we can just get rolling.
Jason, I think a few people are trickling in, but maybe we can get moving soon.
As we're going, I'm going to just first give the quick introduction. Of course, I'm Jason from 𝕋𝕚𝕞𝕖. I'm the relationship manager for the group, and co-hosting with me is Carson. And we're also going to have 𝕂𝕂𝕂𝕂, which is Adrian from our research team. I'm going to be bringing him up here in a minute, as a matter of fact.
Hell yeah, I'm here now.
There he is. So yeah, I think I just stole the show technically by introducing you guys, but I don't know if Carson, Adrian, you guys want to just pop in with a couple of words on yourself?
Sure. So I'm Carson Brown. I'm a product manager on the 𝕂𝕂𝕂 side. So pretty involved with getting Soli out the door as well as work with keeping it running. So excited to chat with everyone. What about you, Adrian?
Yeah, my name is Adrian. I'm a researcher at now 21 Shares, or now it's 21.co. And yeah, we're responsible for all the research that's coming out from our side.
Very cool. Very cool. All right, and so we have a couple of guests on with us, and I'd love to just go around the room, just people who are listening know who we have on the call. And maybe James, we can start with you and work our way around.
Yeah, thanks for having me on. James Mara here, one of the co-founders of Jet, and Jet protocol is a borrowing and lending protocol. We've been doing cross margin since we launched, and have a fixed rate, fixed term product launching in Q4 as well. And we just released a leverage swaps feature on our margining system last week. So yeah, just building in a bear market and loving it.
I like it. I like it. All right.
This is Joe from Aldrin. I'm the CMO at Aldrin. We're a DEX AMM right now. Took the opportunity we're building a lot of things. If you go to our Twitter, there's 7 different steps. We're going to be taking a different approach to some of the tokenomics, let's say, to change the way the emissions work, which we're excited about, and a couple other products that will be targeted more towards mass market and not so much crypto people. So excited to talk to you about it.
Nice. Very cool. So yeah, really, this is just meant to get our listeners acquainted with what's going on in the space, obviously, what's new with you guys, what the protocols are doing, and just get excited about the Sol space. Obviously, we've seen so much innovation happening over on Solana. I'm excited about it. I know the rest of the team is. So I just want to get some of the constituents in our Soli product up here to just talk about what you're doing. But I do want to get this out of the way first. It's kind of a direct question to all you guys. So Anatoly, he was on Real Vision a few weeks ago, and he was talking about network outages and talking about, how it's been a bit of a curse. Now, you guys all run different projects, obviously. So were you affected at all? And if so, how's it been for you?
I think that there's definitely, you feel the pinch of when these things happen, but it's not really, it's something that can be messaged across the network. It's not really the work being done by Solana to fix these issues has been progressive, and granted, sometimes some of the issues seem to compound on themselves, like a fix would cause a new problem. But again, maybe it's just my point of reference, but I just remember like the early days back with Ethereum when like Infura had issues all the time, which pretty much affected everybody because there wasn't any other infrastructure provider. And so you learn to create a user-centric experience, setting expectations with users on what they can expect. And on Jet side, like our liquidator performed pretty well and wasn't destroying people's positions just because transactions couldn't get through. And so we're pretty happy the way that the liquidator held up, and we didn't really see too many unfair collateral seizings and selling. So I'm pretty confident in the progress of the Solana team to solve these issues. But yeah, definitely were affected. But I guess what I'm trying to say is that like wasn't catastrophic.
Nice. That's definitely good to hear.
For us, it was just bad timing. We had just launched our AMM. We had 150 million in TVL, and shortly after it crashed, while we were growing our TVL really quickly, and that caused probably like a 30% drop in TVL across the board for everyone. That's crypto. Yeah, I've been in crypto since 2012. I've seen it 1,000 times. Ethereum also went down like It's part of the course. When you're pushing innovation, things break and you need to fix them. And I think Solana has actually done a good job of getting things back up quickly and making difficult decisions.
Yeah, definitely agree with you on that. Even despite them kind of making headlines and when things go down, I definitely co-sign that they really are on top of getting the network up and running and making things happen. So it's super encouraging from my point of view.
James, I'm curious as a follow-up, since you guys are a lending market, you said you didn't see any unfortunate liquidations that could have happened during price changes during outage. Have you seen a significant change in how people were using the protocol and how risky of loans they were willing to take out? Or have you seen that people are still willing to use the protocol as if the outages hadn't happened?
It's tough to tell whether any of those patterns are related to general macro crypto conditions, a decrease in DeFi usage overall, or whether it's Solana specific. If you go on DeFi Llama or any of these other kind of sites where you can track overall TVL and the usage and borrows, and everything's down across the board, across all L1s. And so I'm always skeptical about pegging a narrative to data that might just be ubiquitous to something larger. And so I just see it as like the market is down right now. And because of that, we see obviously less volume, less trading on Jet, but we also see that across most other platforms as well. So I don't think it's Solana specific now.
Nice.
Gotcha.
Okay. And I see we finally were able to get Waterquarks up here. Welcome.
Hi, I'm Waterquarks. I work on data science at Mango Markets. Mango provides a single venue to lend, borrow, swap, and leverage trade crypto assets through our risk engine. It's all permissionless and it's all on chain. I've been with them for about 6 months, and yeah, it's been a great and exciting experience seeing how all DeFi in Solana is evolving through.
Nice. So I just wanted to kind of field the same question back to you, since you joined a little bit later after we got things worked out there. But in terms of what Anatoly was talking about a couple of weeks ago, in terms of network outages, I just wanted to run it by you as well. Have you seen any effect on your end, or how have things been with you guys?
Yeah, definitely. Mango was very well, or should I say, very badly affected by the outages. What happens is that when there is intermittency, managing risk becomes very difficult for traders. They can't get out of positions or cancel orders in time, which, combined with drops in liquidity, makes people lose lots of money. It has definitely been tough in the past. More recently, the network has been feeling significantly better. No major outages over the last few months, and I've personally heard less complaints about it from our users.
Okay. And then now, on a kind of a flipping the note a little bit, Solana's really leading the charge in terms of networks pushing into mobile pretty aggressively, actually. And let's again take a temperature check of the room. Are you all preparing for that? And if so, how? And this is an open question, of course.
Yeah, we've been since even before they launched their mobile app. We're designing something that I like to call Banking 3.0. It's a hybrid of traditional banking and a crypto wallet, which will use Aldrin on the back end. Because the reason why I like what you guys do, it's what people buy in the financial industry is index funds a lot. And right now what we have are a lot of crypto degens using it. But I think most people are going to be passive users. So we've been preparing for that, where you could benefit from DeFi without even really having to understand DeFi, which I'm sure almost everyone, even listening in or will listen to the recording, probably took a month or two just to study what the hell is it, like a liquidity protocol, how do I get yield? It's a big learning curve. So we're just trying to simplify, and we know that mobile is the way, and we're getting really close to rolling it out. I'm really excited about that. But we've been on that since September, and that's why there haven't been a ton of updates from us on Aldrin, because we're working on the how do you bring the masses and not just people who study a lot. There's an analogy I like to use is if you knock on most homeowners' door and ask them if they have an interest rate swap, they'll tell you no. But reality is anyone with a fixed mortgage has an interest rate swap, right? It's just invisible because only technical people know that. And I think that's how crypto should be. Like most people shouldn't know what is providing liquidity and doing staking and everything else. It just should be a simple feature they can take advantage of through mobile.
Yeah, to answer the question for Jet, we have a mobile focus on the upcoming iterations of the app. And so we've just been developing a parallel with the latest app refresh, focusing on making it work with mobile for sure. It's super important to us.
Very cool. Okay. And then in terms of just generalized adoption, right? Like obviously we've seen adoption occurring at a crazy fast pace since 2021. It's still happening this year, even amidst the bleeding. But what do you guys expect to catalyze adoption for your individual protocols for the coming year, particularly into 2023? And maybe I'll start with water, and then we can work our way around.
Yeah, sure. So Mango B4 is in the works, and if everything comes along nicely with it, I think it will be well positioned to benefit from mass adoption going forward. So onboarding with Mango is already pretty frictionless. You just have to create a Mango account, which is like 3 clicks. And now with B4, you have the ability to list unlimited tokens. So folks will be able to have an easily accessible venue to margin trade pretty much anything. And of course, to lend and borrow their crypto. I think that with all that Mango has to offer, it is ensured to be a central hub for DeFi in Solana going forward.
That's awesome. And that's actually super awesome. And total sidebar, I do have to say that there's like a marginal echo, and it sounds almost like the voice of a deity. So I've got to say, well, you get bonus points as well for the amazing.
Yeah, I'll see if I can move somewhere else. 1 second.
No, it's cool. It's great. It's great. As far as James or Joe, what about you though?
Yeah, in terms of mass adoption, I think it's not really for our protocol, but games are great educational tools. You saw STEPN on board a ton of people. But again, I think the people that are going to be coming on board now are going to be coming on board through ways that are simple for them. Like example, like STEPN, right? Like you use the app, you were able to get on board, you wanted to play the game, and because you wanted to play the game, you learned DeFi without really learning DeFi, let's say, because you were buying NFTs, you were repairing them, you were swapping tokens, like you were doing all that stuff, but you weren't doing it because it was DeFi. And I think that's where the rest of the audience is. And for us, it's more the mobile I explained before. It's a lot of times I like to say, like when the plane was invented, everyone thought by now everyone would be flying planes, but most of us are just passengers on a plane. We're not pilots. And I think DeFi would be the same, where people passively are active in DeFi, but not without having such a big education from it. But gaming will help and gaming will educate because it's an easy way to learn.
Yeah, I definitely co-sign on that actually. I think, and sorry to jump ahead of you there, James, but I will just say that I 100% feel that. I think that the space that we're in, if we look at the past year or even previous years, people jumped on board because they maybe thought it was just like something cool or fad or word of mouth. But I think that as time has gone on, we're seeing people become a lot more savvy and a lot more intelligent about things that they choose to get behind. So I do feel that to see this next leap forward, it's going to take seeing like real utility come from products, real actual value from things, as opposed to just smoke and mirrors.
There's also another issue, like Water mentioned about it being frictionless. It's a blessing and a curse being frictionless because it causes you to create a race to the bottom when we're looking for customers, because it doesn't take any real effort for someone to switch from Mango to, sorry to use both of you guys' example, but from like Mango to Jet. All I do is connect wallet and I'm connected. And I don't even have to fill out like a user form, nothing. So frictionless is good, but then to compete, what's happening because of aggregators is everyone's pushing their prices down in order to compete. And what happens is there's tons of protocols that aren't making any money. And then how do you keep providing users better experience if you don't have the money to invest in better experience unless you go and raise more capital? And that to me is a broken system, because profit at the end of the day is important to reinvest to keep improving what you're offering customers.
Interesting. That's a great take, actually. James, what are your thoughts?
I think there's a lot more work to be done on primitives and experimenting, trying to get the fixed rate, fixed term model to be sticky using, in our case, essential limit order book is something I'm really excited about. I think just every bear market and bull market cycle, people think we're a little bit closer to mass adoption, but then when you zoom out, there's, again, fixed rate, fixed term is just something like, it's mentally it's easy to look and say, who willingly would take out a variable interest rate mortgage in an environment like this if they could get a fixed rate, fixed term mortgage for 30 years? It's what people are used to in the main world, in the primary like meat space world. And I think a catalyst would just be experimentation of hybridizing models that work in retail and seeing how they can fit into on-chain models and be accentuated by on-chain models and not hindered. That's always the rub, is you try and force something that exists in meat space onto some type of blockchain framework, and it just doesn't work one-to-one. So there's always nuances in how people engage with these things, but that's what I'm here for, is just pushing those things forward. Just keep trying to like see what will be most useful for people in terms of utility for the most people, not necessarily just hyper-focused traders or degens, but like even broader than that.
All right. So moving on. So Binance, they recently made a big play. And they by stopping to support USDC. So with all the competition on Solana, do you worry about a centralized entity disrupting what you're trying to do?
I think the only centralized entity I'm worried about is governments, not Binance, because customers will always go wherever there's a better offer. And right now, Binance is using the fact that they control the customer. It's not easy, unlike DeFi where it's frictionless, it's not easy to switch from Binance to Bybit for the average consumer. So they're taking advantage of that, and they'll probably make a ton of money doing it, because we actually did some of the math of how much that move means to them, and it's quite a lot. So it's really, I think, increasing profit move, which to me signals that they typically, when a company stops going from acquire consumers at all costs to okay, how do we cut costs, it kind of signals where they're going to me, which I'm happy they're doing that, because it shows like they're starting to see like the limits of their growth because of how many protocols on DeFi and what's DeFi attracting. And it is growing faster than sexes are in terms of percentage. So I'm not worried about them, I'm more worried about what regulation will bring. And I think there should be regulation. I just don't know what type of regulation.
Yeah, that's always a sticking point, right? I think it's inevitable that there needs to be some measure of oversight for the space. It can't be the Wild West forever. But yeah, what that regulation look like, it eludes us and eludes so many people. So yeah, I definitely hear that.
I think also regulation is another catalyst for mass adoption. Obviously, a lot of us in DeFi space, we might be a bit scared how the regulation might look like, but I think going further into the future, regulation is really important, especially if you want to get into the big players, the institutional investors. And I think if we have a proper, healthy framework, it would be another catalyst for that. I don't know how you guys see that.
I think regulation is important, but I also think that the way that consumers or businesses perceive DeFi versus CeFi is also critically important. Everybody has just seen a crazy kind of last few months regarding the blow up of the CeFi lending, the opaque CeFi lending. And it always, even before that, it always bothered me when you'd see like a centralized company that has like people sitting at a desk matching lenders and buyers calling themselves DeFi because they traded crypto. I think as long as CeFi is further defined as what it is, it has its place. But I just don't think conflating it with DeFi is, I think that's going to bring up the wrong attention to the space that nobody wants. Having consumers be like, not actually know if they're interacting with a permissionless protocol or if they're interacting with something that's like dApp and half centralized business and not really be able to see the lines between the two. So I think that's really important. I definitely see, I think Binance and other big exchanges like FT, they could wind up having huge lending businesses potentially. Why wouldn't they? There's a business opportunity, but it's just, again, it's important for people to realize that if they want to manage their own risk, a lot comes with that in terms of burden and responsibility for themselves, but also they can also limit risk as well and have maybe better upside, maybe better returns. So I think there's just a lot of opacity in kind of the market and what consumers think they're interacting with versus what they're actually interacting with.
I totally agree with you. I think all the craze that we saw over the last couple of months, I think the average user, or if you ask anyone on the street, they would blame it on DeFi, even though it's not. And I think that just shows that it needs so much more education to really show the benefits and the advantages of decentralized finance versus those centralized entities that kind of look like they're doing DeFi in the front end.
I just want to make one last kind of final point. It's like, I think retail needs to be educated on this, but I think the government officials really need to be educated on it as well, and understanding smart contract risk, understanding like how a default would be addressed in a CeFi institution versus a smart contract blowing up in a DeFi product that's permissionless. Like that, a lot of the outrage from some people, at least in the US government, on what happens to consumers, like what their recourse is after, say, whether it's a hack, whether it's just an error or something else, versus a CeFi product winding up being either like insolvent or fraudulent or whatever. Like the recourse that a user has is so different. And I think that the discussions on regulation can't take place effectively until that nuance is really understood. I think that's one of the absolute biggest opportunities for education right now is like really drilling down on that.
I completely agree. And I think on top of education, I think it's also just demonstrating the benefits that I think all of us have seen and making sure people are aware of the benefits of decentralization and DeFi over these centralized. I think centralized lenders are obviously on mind, as some of the centralized ones ran into some issues in the last few months. And I think highlighting how some of these decentralized lenders have actually been able to navigate these waters quite easily, given the implementation of the smart contracts, while the centralized ones haven't. I think that's really what can help force the adoption when people really take a look at how the different parties have succeeded over this time.
Yeah, I feel politicians look at where their voters are feeling, what sentiment is. So when something like Luna fails, Elizabeth Warren comes up and says we need to regulate DeFi. The reality was their platform didn't fail, their tokenomics failed. And I think the public confuses the two very often. One thing is the token, another thing is the actual platform, and they're different, but they're not treated as different. And even in turn, even us don't treat it as different. We call everything DeFi, but they're two very different things. The way a customer can transact on Anchor, for example, that didn't break. What broke was the tokenomics of the token, and that I believe should be regulated, not everything else they're talking about doing with DeFi.
Yeah, I would 100% agree with that. 100% agree with that. And it goes back to what we've all been saying in different ways. It's an education thing. I think regulators need education, but also users. It's having the space a little bit more regulated in whichever shape or form that takes is going to be a necessity. But I think also just having the end user take the time to just slow down and educate themselves on what exactly it is they're getting into before life savings are dumped in things or whatever not, I think is also a pivotal part of the equation. But so as we talk about the ecosystem growing and what it might take to move things forward, interesting piece of information that came out recently, obviously, like Nitro, they recently announced building the first L2 for Solana. This would be Solana's first scaling solution, connecting it to IBC and Cosmos. What are your thoughts on that, and how do you think it will impact the ecosystem?
I think it's exciting. The switching costs are not trivial when you have a product on one chain. It's one benefit Ethereum has had is compatibility, but Solana, it's a question of waiting to see what the scaling solutions would be and whether just switching to a different chain is not really like a good option for most teams, I would say, especially given like capital and talent constraints. So I'm definitely eager to see what kind of boundaries can be pushed there.
Yeah, I agree with James. I'm not as close to that. I'm not watching it, so I can't really comment with any expertise, but I am watching it, and it's still a chapter to be written to see what happens.
Yeah, definitely. I think we have to see what happens. But even just thinking about the possibilities, I think it's such an exciting moment. And I think particularly for Solana, it makes me fairly bullish on the future and however it turns out, even whether it has its own hiccups or has its own issues. I think that there's so much potential just being touched on just by this even happening. So
I think if you have an opportunity, I think that for retail, it's obviously important to know that your transactions are going to get through in times of duress. But I think that this also signals to hopefully the larger institutional market that there can be a option for enjoying the benefits of Solana, but not necessarily exposed to the main chain's issues. Hopefully, like there can be costs and incentives structured there where you don't want like the scaling solution to wind up getting spammed as well. You want there to be like an actually like sane approach to incentivizing, preventing further problems on whatever the next layer is. But I guess what I'm trying to say is if you can create some type of parallel layer to operate, I think that's going to be really interesting for a lot of institutions based off of some of the conversations we've had.
I'm actually more excited about this. I don't know how familiar you are with it, but the Helium voting on whether they move to Solana, because they're making 5G in the Internet of Things, or they already have in all reality. I don't know if they have Lime scooters where you are. They're like the electric scooters, like all the GPS systems works through Helium. And it's the founder from Napster. He's one of the founders of Helium. And it's exciting that they're choosing Solana to move to. And I think it's like 260,000 users that's on Helium. So I'm excited about that, like new use cases on Solana.
That's actually super interesting. I didn't know that about the Lime. I've used Lime scooters, not where I am, but I've gone down to Austin and seen them, and you use them down there in Texas. So that's actually super interesting. That's cool.
Me neither. I didn't know. I'm super surprised. It's crazy.
Yeah, their GPS uses Helium. Helium is decentralized, and now they're voting. So they vote today on whether they go to Solana or not. But now they're also trying to build 5G because the big operators can't afford. 5G's problem is you need a lot of antennas. So if you distribute a network where someone puts like a box in their home with 5G capabilities, then they can cover cities, which the big networks can't do because they're not going to be able to get the real estate to do it. So I think it's pretty exciting.
That's actually super interesting. And actually, yeah. And I think if you think about that, even something like Netflix, where it's using numerous amount of gigs of data just to stream like movies or films or whatever not. If you actually convert that and started streaming that over like a 5G network, like that's paid for in data credits. So that's like by the viewer. So that's interesting possibilities.
Yeah. I think the team behind Helium is what gave it credibility. If you had a team like that doing cloud computing, I think you'd start seeing people like Netflix moving their cloud storage to a decentralized thing. And that's really exciting because then we start talking about real volume.
Huh. Now I've definitely got something to look into more. Awesome. So now we're closing in on the end here, but I wanted to kind of ask you guys a couple of other questions really quickly. Ethereum, we just had the merge occur, and it's the talk of the town, even though arguably we can debate on whether or not it was a huge event or not in terms of actual impact. But what is undoubtable is the fact that Ethereum has paved the way for crypto as we know it today in the DeFi space. Now, Solana's co-founder says he expects a lot of upside post-merge for Solana and all the related projects. Have you each felt like this has materialized? If so, I'd love to know how. And then if you feel like there hasn't really been anything, then I'd love to know why not.
I think sorry, go ahead.
No, please, you first.
Sure. I think it might be too early to say, actually. The merge happened just yesterday, right? So we've still yet to see how the market will react or how the chain itself will react while undergoing volatility. If proof of stake Ethereum proves itself to be remarkably better than its predecessor, then it should draw all of the innovation towards it. This, I think, will incentivize competition across all the other chains, which I think would better crypto as a whole. But nevertheless, I think it's really just too early to say whether it's going to improve everyone or really what's going to happen.
I strongly agree with that as well. I would echo that and also say that there's too much. I'm of the belief that this isn't necessarily a macro defining event. This is a huge milestone for Ethereum, very long time coming, huge technical coordination challenge, and they deserve all the credit for what they've been able to do. But I think the macro environment, generally speaking, in terms of interest rates and everything else, also affects the inflows into crypto as well. And so I think that is it huge for Ethereum? and the progress, absolutely. I think, does it have the oomph to change the direction of the broad market just for their own network and others? I would say, I'd venture to say probably not, or remains to be seen. I'd say we're like in a bigger, larger story as an industry right now than just one network having an upgrade, or if Bitcoin were to have a happening right now, would it blast things into a new net stratosphere with the current macro environment? Probably not. But yeah, all the props in the world for what they pulled off. It was definitely a Herculean effort.
Yeah, no, I agree with James. It's a huge effort, but to me, innovation almost always comes in the form of speed or price. If you can argue Uber used to be cheaper, now it's more expensive than taxis, but you're not waiting unknowingly how long it'll take, how long it takes. So it saves you time. Airbnb, Amazon, you can name innovation after innovation that is either faster or cheaper, and that's typically what drives innovation. And I feel like ETH fixed the problem. ETH fixed the problem that wasn't a problem to most people. The issue with ETH, the mass exodus of people from ETH to Solana was because of gas fees. This doesn't fix gas fees. So I still think they have the big problem that they've avoided for 2 years, let's say. And that's the problem they need to fix. I think if ETH fixed their gas fees somehow and the speed, I don't think there would be other chains, to be honest, because you can look at the total value locked on ETH versus every other chain, and it dwarfs it. And I think most people stayed because they were hoping this was a fix to gas fees, and it's not. And now it's obvious that it's not going to be, at least not for many years down the line. At least that's what the reports are saying. So I agree with Anatoly. This will help Solana because people will be like, wait, this didn't fix what I thought it was going to fix. I need to find a better solution. And that's where Solana becomes really attractive.
Yeah, it is interesting because I think for people who weren't really versed in what the actual merge was aimed to do, I think a lot of people were running off the idea that there was going to be this like huge immediate effect on gas fees, etc. And while I agree with you, and I agree with actually all you guys, I think that while you've seen this like what 0.02% reduction in emissions, I think would be like the net result of the merge. I think that's what they were predicting. A, it is too early to really see any tangible benefit of what's happening right now. But B, I think that when you're thinking about gas prices and that sort of thing, one of the huge sells of Solana and some of the other alt chains is the fact that transactions happen incredibly fast and incredibly cheap. And I think if Ethereum did have a way to, or does eventually address that in a lasting way, that's going to be good kudos to them. That being said, I think this was a Herculean effort for real and an amazing feat for them. And I think it does, in fact, drive the entire space forward in its own way because it does put Solana and other chains in a position to be like, okay, cool. Now let's add more value to what we have. You know what I mean? So that we can really show how we differentiate ourselves or whatever not.
But now they have to become decentralized, which they used to bash Solana for not having enough validators.
Yeah.
So, don't mind me. I'm just a Solana maxi, so I'm not going to have a favorable point of view.
No, but I think you guys are right. It's a massive opportunity for Solana as well. Obviously, they need to fix the outages, but overall, I think Solana still has amazing reputation. And obviously, it's going to take 1 or 2 more years. I would say rather 2 years until Ethereum introduces sharding and have another major upgrade, and until we see all the layer 2 thrive. So I think it's going to take a lot of time, but in the meantime, Solana really has the opportunity to gain more traction and attract users to their ecosystem.
Yeah, I love this competition's net benefit for everybody. Having some like monolithic player in the space, I think the competition's great. And I definitely wouldn't want to be starting a new L1 right now. That's for sure.
No, that's yeah. It's really nice actually to be in a space and hear a choir of similar voices in that sense, because I agree, competition is healthy in any industry. It promotes innovation and it keeps people excited and motivated. So I completely agree with you guys. Now, that being said, this is not a financial advice question or any of that, but CoinDesk, they threw out an excellent article a couple of weeks back and just talking about the bull market and what might be the catalyst for the next bull market. And while, again, not financial advice. This is complete opinion. What do you gents think in terms of what might spark the next bull run?
Lower interest rates.
Yeah, it will be either the Fed lower interest rates again, free money makes the number go up, that or decentralized finance going from a simple alternative to a necessity, say because of a war or some other type of societal catastrophe. This won't be so much a bull market as it will be a survival market, but in any case, it will definitely pump everyone's backs.
Yeah, I agree with Water. I think it's the U.S. government's not focusing on the problem. The problem with inflation is supply chain, not inflation. And because they're not fixing the supply chain issue. And I don't know if you guys have listened to Ray Dalio, but he's always said the U.S. dollar next is going to be deflationary, which is starting to happen, starting to become more valuable in the euro, and then it'll become hyperinflationary. And I think the next wave, unfortunately, because it will cause a lot of pain, will be from people escaping inflation of currencies, like we saw in Turkey and Argentina, starting to see in Brazil. And unfortunately, I think it will happen to the US.
Yeah, I tend to agree. I think it's interesting. We sometimes get so focused on crypto and DeFi, and I think that or some people, forget about how much macro events and macro factors play into the course of where we're going. And I think whether we're talking about, the Fed interest rates or Ukraine v. Russia, or even some other things that are happening in the EU right now, there are a lot of things that I think need resolution one way or another before we can really see like a real solid spark. But on the flip side of that, I think you're right when it comes to looking at the devaluation of fiat currency. I think that we're looking at, kind of the other side of that coin of what needs to be, or where there have been missteps that, if they're not addressed, will drive people towards our ecosystems collectively more out of a sense of survival than anything else, or they need to survive.
Let's not forget the insidious nature of privacy or the lack thereof. I mean, none of this works. It's a lot harder to use crypto if there's boxes put on how you can get your money in and out of fiat off ramps and on ramps. And if a lot of the stuff about being able to transact privately is coming under focus right now with Tornado Cash and everything else. So I think that there's a lot of existential questions being asked right now. And I don't think it's entirely all price motivated. It's largely a control issue. So definitely I wouldn't factor out how the privacy discussion plays out with national and domestic regulators. It's pretty crucial.
Honestly, I love this exchange. I think that we've covered some really interesting and profound topics. We've gone everything from the relatively funny topic of just what can start a bull run to a little bit more deeper introspective topics, and then just talking about what's been going on with the protocols and how everybody's working behind the scenes. And I think that it's really amazing. I'm excited about our industry in general, and I think any conversation that I can have with people in the space and educated people in the space, and where I can bounce ideas off of and just learn from, I think is just an amazing opportunity. I definitely want to thank you gentlemen for coming to the space and taking the time out of your days to bless us with some information.
Yeah, my pleasure.
Yeah, thanks for the invite. And I like what you guys are doing. I like what James is doing as well, like trying to replicate what exists in traditional markets and just make a better offer. And I think that's an important thing that DeFi needs to do. Thank you.
We agree. Thank you.
Thanks for the invite.
Cheers, everyone. Have a good weekend.
Thanks. You too.
See ya.
Thanks, guys. Bye-bye.